And for those of you that don't know, you can pay 5 to 8% in closing costs of the purchase price as a cash buyer. So it is more expensive to do financing. It always is, but it's not as dramatic when you put it side by side.
Right. And that, one of the benefits of living in Mexico, either full-time or part-time, right, is the general overall lower cost of living, right?
Mm-hmm.
Like homeowners insurance is less, water is less, electricity is less, right? I mean, all of those other factors.
Real estate annual taxes are
that's significantly less. Yeah. I think last year was 30.3% of the cadastral value,
property value,
something like that. Yeah. In California, we're like 1.25%. I think Texas is maybe even double that. So huge value. It puts those closing costs and monthly mortgage payments into perspective for sure.
Welcome to the Nick Fong Podcast. As the broker and owner of Ronival Real Estate, Nick has spent nearly 20 years in Baja, California, sir. And in this podcast, he'll be talking everything Baja, from food and culture to real estate and property management. And now, here's your host, Nick Fong.
All right, welcome back to the podcast. Alex,
Koper,
Moxie Mortgage.
Yes. Hey, Nick.
Good to see you're in town, and thanks for joining us on the podcast. A lot to talk about.
Really exciting to be here. I always enjoy coming to see you and your team. This is a lot of fun. Thanks for having me.
Give us an update. What's going on in the mortgage industry here in the Baja?
Yeah, great opening question. The mortgage industry has been a bit crazy in the last 12, 15 months in the United States, right? And so Moxie's customers specifically are U.S. citizens. It's been interesting to see the impact of the Fed and the short-term interest rates in the United States and how that is changing things as it relates to foreigner purchases or financing in Mexico. It's interesting. Our business has picked up. We continue to kind of double our volume year over year, and I think it seems counterintuitive, but some of the short-term interest rate increases in the United States are actually work in favor of choosing financing. In
Why is that?
Yeah, so I think before Moxie existed and or when short-term interest rates were really, really low in the United States, clients chose like home equity lines of credit, for example, or cash out refied property in the United States and brought the cash over the border to buy here. Those home equity lines of credit have adjustable interest rates. So a payment on, a $500,000 HELOC balance 12 months ago, was half of what it is now. Okay. So people are really valuing the fixed interest rate and the ability to get, a secure equal payment mortgage loan that's originated in US dollars.
So the gap between US mortgage interest rates, whether it's a HELOC or a fixed rate mortgage, and the rates that you're offering here in the Baja, it's smaller than what it was a year ago.
Great point. Yeah. So Moxie, we actually did a number of trades with a large insurance company in the United States, which enabled us to get it's called a forward flow agreement, but essentially $300 million in capital that renews, that enables us to lend, to offer the Moxie loan products to customers at much more favorable interest rates than when, Global Mortgage, which is our predecessor company, when we first got started. So what that means in actuality, maybe when back 2-3 years ago, when rates in the United States were 3%, Moxie was making all loans at 9.99. Today, rates in the United States, 30-year fixed mortgage, maybe 7 or 8%. Moxie's rate range is going to be between 7 and 9, right? Depending on a couple of factors. So much lower spread than ever before, which is great.
So if any of our viewers or listeners haven't listened to other podcasts that we have done, what are the variables that are going to affect the interest rate for a Moxie client?
Great question. So besides market movement, right? So rates are fixed always for the entire term of the loan up to 25 years. But that rate is finalized about 5 days prior to close. So besides market movement, it's loan to value, FICO score, and then the loan size. So the higher the loan size, the better the interest rate at Moxie. And so that's the basis for the pricing.
Is that the same in the U.S.? Because what I remember, the higher the mortgage loan, the interest rate was higher. Isn't that true? So it's opposite for Moxie?
That changes based on a number of factors. So in the U.S., I'll try to make it as simple explanation as I can. In the U.S., there is either a loan that can be purchased by one of the GSEs, like Fannie Mae, Freddie Mac, or there's what's called a non-QM loan, right, or a loan that's not purchased by one of these GSEs, and that changes. So sometimes the lower loan amounts, so the GSE or the QM mortgages have a limit of the loan size, and sometimes a non-QM loan is priced better than an agency loan, and sometimes not. So that really flip-flops. At Moxie, that spread, that I mentioned, if you were closing today, would be between 7, 8, 9, something like that, is a pretty tight spread. But we do offer we lend from $250,000 US all the way to $2.5 million US, and in those higher loan amount sizes, we discount the rates just a little bit. So,
and the minimum loan to value.
The maximum minimum down payment. 35%.
Okay.
So 65% LTV plus obviously closing costs in a purchase transaction, and we do purchase mortgages as well as refinancing, cash out refinance, which is an exciting offering.
So the refinancing. So someone that already owns a house or condo can approach Moxie and do what? Yeah.
So. A rate and term refinance is when someone already owns a property and already has a mortgage on it. For example, developer financing. So if one of your clients bought new construction and took the developer financing a couple years ago, maybe there's a balloon payment coming up. Sure. They don't want to have to deal with figuring out how to satisfy that lien. Then they could come to Moxie, get a 25-year fixed rate loan for that balance, pay off the developer, and now have their loan with Moxie. The other is maybe they paid cash, right? And they want some liquidity out of it. And so we'll lend up to 60% of the appraised value, even if it's higher, right? And a lot of times that's been the case, especially in this area.
Does it have to be developer financing? Can it just be regular seller financing?
Sure, yeah. You can pay off the seller lien, absolutely, yeah.
Because we have probably about 10% of our deals that are with seller financing. And usually it's 5 years or less, the loan term.
Yeah.
So that's an option for those kind of purchasers or homeowners.
Absolutely. And I think the other so Moxie loans are all denominated and originated in US dollars, and they're serviced in the United States in US dollars. So you don't have any foreign exchange risk. And in addition, we report, or our subservicer reports interest to the IRS in the US. So some clients, I'm not a tax attorney, although you should maybe have one on a podcast sometime. But some clients report to us they've been able to deduct Moxie mortgage interest on their US federal tax return, depending on their situation. So that's cool.
That is very nice. And the loan terms, you said 25 years, that's the max.
Yeah. So we have no change in price based on if you choose a 15 or 20 or 25-year loan. So most clients choose 25, and there are no prepayment penalties. So they can always pay extra if they want, but they have the flexibility to pay less. But yeah, we offer 15, 20, or 25-year terms.
So no prepayment penalty.
Correct.
Okay. What about closing costs?
Yep, good question. So we are a financial institution, right? And we will always over-disclose everything, which includes not only our costs and charges, but also any other costs and charges that apply to the transaction, like notario fees, like Isabi tax,
Isabi tax?
Isabi tax is transfer tax. Yeah, sorry. I know you know what that is, but probably good to explain. So all of those fees, costs, and charges, we're going to disclose them. In fact, we have a pretty significant document. It's like a fee letter disclosure that any clients that approach us are welcome to read through, and we sort of outline for foreigner purchases in Mexico what are all the potential cost charges, including Moxie fees, but also all third-party fees, costs, and charges. So that's all available when clients speak with a mortgage advisor, we send a link to this disclosure. It's really, really helpful. Generally speaking, depending on the transaction, on a purchase transaction, depending on the price of the property, it's between 5 and 10% is the total closing costs. Some of those, so it might be like a little bit lower if you were paying cash versus if you're doing a Moxie loan. But a number of those closing costs are, charges you would pay
as a cash buyer.
As a cash buyer as well. Yeah.
And for those of you that don't know, you can pay 5 to 8% in closing costs of the purchase price as a cash buyer. So it is more expensive to do financing. It always is, but it's not as dramatic when you put it side by side.
Right. And one of the benefits of living in Mexico, either full-time or part-time, right, is the general overall lower cost of living, right? Like homeowners insurance is less, water is less, electricity is less, right? I mean, all of those other factors.
Real estate annual taxes are
that's significantly less. Yeah. I think last year was 30.3% of the cadastral value,
property value,
something like that. Yeah. In California, we're like 1.25. I think Texas is maybe even double that. So huge value. It puts those closing costs and monthly mortgage payments into perspective for sure.
You mentioned that you have been doubling the number of loans that you're originating year over year.
Yeah.
Where do you see the next year for Moxie and the industry in general?
Yeah, good question. So the Moxie team is growing. I think our ability to prove within the institutional capital markets in the U.S. that these mortgages are really good loan products for an investor to buy has, and bringing in the large flow agreement with the insurance company in the United States, bringing low cost of capital to the Baja has been, really instrumental and will continue to help us fuel our growth. Moxie lends across all of Mexico now to U.S. citizens, and we're looking forward to continuing to expand that. I would say our biggest opportunity as an organization is making sure people know we exist. It's been so long, like decades, maybe decade plus, since there's been reasonable financing solutions for foreigners in Mexico. So, I'm just really excited about what we'll be able to continue to offer, both on the purchase side as well as on the refinancing, cash out refinance side. It's an exciting time. I think it's great to be able to support our real estate partners as well. I think when financing becomes ubiquitous for foreigners in Mexico, it's really going to help everyone, right? Existing owners, real estate community, developers, right? I think it's really going to be transformational.
Is Moxie lending on raw land? Right.
Good question. So right now, no. We're lending on finished habitable residential property. So condo, single family residence. We'll lend on up to 4 units if someone's buying a triplex or duplex. And then single family townhome, those sorts of things. Right now, we don't do construction financing or lot loans. We do have a lot of customers that use us when they're closing on new construction. Sure. Maybe they got into contract a year and a half ago or so. And I would say the best thing for anyone that's doing that is to probably get in touch with us about 90 to 120 days before the anticipated delivery date. They're welcome to pre-qualify or get a pre-approval in advance of that. But the rubber really hits the road about 3 months before the closing date.
Because there's so much new construction, what are some of the things that buyers and real estate agents need to know if they're working with Moxie, maybe prior to negotiating the purchase contract, contingencies, that doesn't later become a surprise?
What a fantastic question. I'm so glad you asked it. If I had one wish, so to speak, it would be that everyone listens to this section of our conversation today. Moxie's requirements are no different than Mexican law as it relates to closing. So when you close on a transaction as a foreigner or as a Mexican national, and you do that legally, you create a deed with a notario. And in order to do that, you have to have your condo regime, if applicable, it has to be recorded. That can take 6 months. So if the developer doesn't do that, you might still get keys, you might advance the whole amount, but you don't actually, in the eyes of the law, own that unit. So recording of the condo regime, manifestation of the construction with the cadastral office is really important. And those are just like some details that protect the buyer or borrower. Moxie will insist on that, but those are important things to sort of, for a potential buyer to discuss with the developer up front, like I'm using financing. When we close, it can't be a soft close in order for me to do it. And the other thing I'll mention, like on new construction, that I think is helpful. Oftentimes buyers will get into contract, they'll advance deposits along the way. So maybe when they first sign the contract, at the roof on, or mostly completed, and that's fine. So even if the contract states that the buyer will advance funds to the developer, almost the entire thing, right? When we do the closing, if there are excess funds in escrow, they get refunded. So it's almost kind of like a cash out purchase, if you want to think of it that way. So just because you put more than 35% down throughout the construction process and then take a 65 LTV loan from Moxie, doesn't mean, it doesn't mean that you're limited.
Hey, thanks for being a part of the Nick Fong Podcast. Make sure to subscribe to the podcast to get the latest updates. And if you're watching this on our social channels, please like and share. And if you want to be featured, or you want me to talk on a certain topic, food, activities, culture, real estate in the Baja, drop a comment.
All right, so an example, one of our projects, Cine in San Jose, pre-construction, the developer requires 90% of the purchase price be paid in a combination of down payment and payments during construction, right? So if they were getting a mortgage from Moxie with 35% down, but they had 90% to pay during construction, they could pay the 90% during construction, but then at the closing table, they would get a refund of 55%.
Correct.
Right? 55% of what they paid already.
Correct.
And then you would put in another 10% that would go to the developer.
Correct.
So in the disbursement instructions, 55% goes to the borrower.
Correct. Less the closing, like the transfer tax, that kind of stuff. But yeah, absolutely. So it's like a cash out purchase.
So pre-construction buyers can take advantage of the lower prices and the appreciation during construction, and then get that money or that 55% that I used in the example.
Yeah. And so they end up with a 65 LTV mortgage on, and in actuality, the new value by the time they move in is
going to be
higher. So maybe the actual LTV ends up being, lower. By the time we go to do the appraisal, it might appraise much higher. So
interesting point. So the LTV is for Moxie is based on the appraised value or the purchase contract price?
Good question. It's the lower of the recorded purchase price or the appraised value. But the appraisal still gives you like great information. We often see that with pre-construction buyers that are closing now that got in, especially now. The appraisal might be $200,000, $300,000, $400,000 more than the original contracted price. So we'll lend on the original contracted price because that's what the credit policy says, but we provide a copy of that appraisal. It's pretty exciting for a client to see that, like, hey, I bought this. Maybe I did advance 90% of the purchase price, but I don't even have to move in and I could profit $500,000.
I think for you as Moxie, that's a huge advantage.
Yes.
Because you're seeing a borrower that's able to pay 90% of the purchase price. And then when the keys are delivered, the value is even higher. So in reality, the LTV is lower, but you're going to lend on the lower of the two.
Right.
Purchase price.
We do have clients that come back to us We have a seasoning requirement for when the original transaction closes versus when they can come back for a refi. But we have repeat customers who come back to Moxie a year or two later. Maybe their needs have changed, whatever, and they want to pull cash out, and we'll use the new value. As long as it's been 12 months since the original close date, we'll use the new appraised value to lend on at that point.
Are cash out refinances cheaper than purchase mortgages?
In a sense, mostly because you don't have the ISABI or the transfer tax. So that's not due. I would say, and this is a good question because some new construction buyers say, oh gosh, I've already advanced in your example, 90%. I'll just do the other 10 plus the closing costs. And then I'll go to Moxie after the transaction records and I'll do a cash out refi then. And that's fine. We see that often. Two things though. One, we can't actually close on the cash out refinance until the original purchase is recorded, which here can take
6 months.
6 months. Yep. And two, you're going to pay some of those fees again. So you're going to pay notario fees a second time. That's probably the biggest.
And maybe a new trust potentially?
Sometimes.
Okay.
Yeah. We in probably 75% of our closings, we end up working with if there's an existing trust, we end up working with the existing fideicomiso bank, and we do a transfer or a substitution of trustee and substitution of fiduciary.
Okay. Are there what are those trustee banks that you can do that with? To name a few.
Yeah, most of the trustee banks that currently hold the trust are really amenable to working with our team as far as like turning that relatively quickly. And then we have negotiated rates with vendors that are really, I think, really competitive. I think among the best. And so we often work with Banco Atofin, for example, and they do just a terrific job. And they'll work with the existing trustee bank just to substitute the existing trust. Okay. You don't need a new permit from the Secretary of Foreign Affairs. You don't need, there's obviously some small setup charges, but you're essentially changing the account over to the other trust, but you can avoid the Secretary of Foreign Affairs permit that way.
Okay, so if you're buying pre-construction, it's better to get Moxie involved in the very beginning. Don't close on it as a cash buyer. Do this kind of pseudo cash out refi.
Yeah,
because you'll save a little in transaction fees.
Yeah, but if you missed that boat,
you could still do it.
Yeah, no problem. Still give us a ring. And I would say like new construction buyers, like if you're just getting to contract now, you're welcome to reach out to us, and we can have a chat, even do an underwriting review if requested. But generally recommend 90 to 120 days before delivery. Because that, like a credit report expires after 100 days, an appraisal will expire, those sorts of things. So it's better to do it a little closer to when the rubber's going to meet the road.
Okay. What new products have you put out? You were mentioning something on your website that you just released.
Oh yeah. Okay. Thanks for asking. So yeah, pretty exciting. Like the team at Moxie has been working kind of behind the scenes, building out some different technologies that we use internally to make the closing process really easy for our customers. So besides that kind of technology work, we've just built a public tool. And to my knowledge, it's like the first and only ever in Mexico. But it's a payment estimator, or like a kind of a mortgage calculator, but for Mexico specifically. So clients can enter in the anticipated purchase price. It'll default to the down payment Moxie requires, but they can change that. And it'll calculate what the mortgage payment would be. But it also has like a section for fideicomiso, annual fee, renewal fee, which Moxie collects a portion of just monthly with the mortgage payment, property taxes, chooses an estimate. And it'll also give we were talking about that closing cost range, 5 to 8%. It'll give an estimate of the amount of cash to close. Like if you were buying a resale, it's on the market for $1 million, let's say, you would put in what you want your down payment to be. It'll spit out what your total monthly payment is, including tax, insurance, fideicomiso. And then it will also tell you approximately how much cash you should be ready to have to do the closing.
Okay. Closing costs, can you finance them?
You can, up to subject to Moxie's credit policy as it relates to maximum LTV. But yes, we do have, especially for high high FICO score customers, we have some sections of our credit policy that allow finance closing costs. Yeah.
Is there the lowest FICO score you'll accept?
700.
700.
Yeah.
So you need to be an A borrower or just slightly under?
I would say like a B plus. A B plus borrower. Yeah. I think most of the most clients we see, actually have FICO scores well north of that. Mm-hmm. But yeah, we'll go to 700. We'll always, one of the cool things about Moxie is we have a great team and we're a really tight knit, close group. So our underwriting group works really, really closely with the sales and operations and legal and closing team. We'll look at anything and everything, and we'll try to make anything work to the extent that we can, right? So we'll do, policy exceptions as needed if there are strong compensating factors. Sure. We work with a lot of self-employed borrowers that own their own businesses, have various different entities and holding structures, and that's our jam.
Will you lend to a U.S. entity, non-individual?
Yep. So an LLC, a trust, or a corporation. There are some, sections of our guidelines that give more information on that, but the short answer is yes. So individual, trust, LLC or corp, those have to be domiciled in the United States. Mm-hmm. So not a Mexican entity, but a U.S. entity.
Okay. And you won't lend to a Mexican entity owned by an American?
We will not.
Okay.
Yeah. It has to do with the way that we secure our lien in the fideicomiso. Mm-hmm. And so it's, got to be a U.S. domiciled person, natural person or entity, one of those three entities I mentioned.
Okay.
And our team has a really tight process around this using some of the technology we've built. For example, if you're allowed to, by the way, create an LLC for the express purpose of a purchase of property in Mexico and using Moxie to lend on it, that's fine. It doesn't have to be an existing one. Those LLC articles have to be notarized in the United States, apostilled, and then translated when they come here. Moxie has a pre-negotiated rate with an apostille vendor who turns apostilles in 24 hours. Right. So we handle all of that with the client, of course, but we have expedited ways of making that process really easy. Mm.
One last question.
Sure.
How, if at all, are U.S. mortgage interest rates influencing the rates that you offer to buyers here?
Yeah. Good question. And as I mentioned before, we're pretty on par with U.S. non-QM mortgage rates, generally speaking. We don't have any change in price if the occupancy, regardless of whether the occupancy is primary residence, investment property, or second home, or if the client wants to rent out the property part-time on Airbnb, that's fine. We know everyone's going to do that. Right. And so if you think about the fact that a U.S. mortgage interest rate, let's say, for example, 7%, you could get a 7% rate from Moxie. The 7% rate in the United States is for owner-occupied, roof over your head, right? And the Moxie loan doesn't require that. So in some cases, there are areas where we're better. Relative to other Mexico financing options, again, to my knowledge, we're the only ones that report interest in the U.S., service the loan in the U.S., which is a powerful combination. If you were to be able to deduct the interest, the effective after-tax interest rate would be significantly lower.
If people are very in tune, our American clients, with the U.S. mortgage interest rates, if the mortgage interest rates in the U.S. go down or up, does that same thing happen with Moxie?
Yeah, the way that we've structured our pricing policy now is that yes. Okay. So rates are tied to an index. It's called the 3-year swap rate, which kind of moves in tandem with U.S. rates. So we're generally going to be pretty close to par.
At least the trend. So if the U.S. mortgage interest rates are going like this, Moxie interest rates are also doing the same.
Generally, yeah. There are some exceptions and some favorable ones, I would say. Our rates started maybe a year ago when rates were maybe a year and a quarter ago. Yeah, but when you could get a mortgage rate in the United States for 3.5 let's say. We had a rate on our rate sheet in the 6s. And now that rates in the United States are 7 or 8, you could get a rate on our rate sheet today in the 7s. So
you didn't go up as much.
We didn't go up as much. Yeah.
Good.
And that's a function of that index and what it does, and some of the changes we've made internally to make this easy and exciting and powerful for people. So,
Alex, thank you.
This was so much fun. Thanks for having me.
And I welcome you back. If there's any new announcements on Moxie or just the mortgage industry in general in the Baja.
Yeah.
It's really important, and I appreciate all the service you provide to our clients, because we do deals with Moxie Mortgage.
Yeah.
And if you have any questions, contact Alex or his team. They're a great team. Office still located in San Jose,
In San Jose, yeah. On Plaza Peninsula, yes. Or our website's probably a great way to reach us, and all kinds of fun FAQs and e-brochures and things like that. So make sure I get you the site you could put up on the screen.
Thank you very much.
Thank you.
Until the next one. Bye for now.
Bye.
Good.
That was good.
Yeah.
Thanks for listening to this episode of the Nick Fong Podcast. Make sure you subscribe to the podcast and the YouTube channel at youtube.com/Ronival Real Estate, and follow Nick on Instagram at NickFong_Ronival. Ready to find your Baja dream home? Check out the latest property listings at Ronival.com or findmexicohouses.com. Hasta luego.